Hey everybody, it's Captain Seth and your Uncle Paul for Everything Money. Welcome back to the show. Thanks for joining us as always from all over the world. Paul, we're so surprised at how many people all over the world are fans of ours. They're in our Patreon. I'll talk about that in a minute. We've been asked a number of times our thoughts on CCIV. This is Churchill Capital. They have plans, or at least discussing, or it's in the works, yada, 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 about merging with Lucid Motors. So I want to ask Paul, okay, fine. This stock has risen hundreds of % in the past 6 months. It was down near $10. It's up at 34. For the young folks out there, this is your growth stock, and we don't want you to be confused with fundamental investing and momentum trading. They're two very different things, and the companies that we analyze can line up under these two buckets. But for example, we do not want you to be confused in that CCIV might be a fundamentally sound long-term play as opposed to maybe some sort of day trade. But just the idea, Paul, of one capital company potentially merging with another spikes prices through the roof, and we want to try and inform you why, or at least our thoughts and opinions on these companies. So in general, Paul, what is a SPAC company, you think, and what is this hype around a merger? What can happen with these companies?
So what I want to really focus on, Seth, is there's a lot of people in there. When we look at our data from YouTube, the vast majority of our viewers are in their 30s. I'm in my late 30s. Seth is in his. Seth's going to be 40 here in a week. Is it a week?
Yeah, it's a week next Wednesday.
Go back, just Google sometime. Open up your Google browser and say, how many internet companies went bust in 2000?
That's exactly it, Paul. People are saying that the EV wave, which it will be big. They are making electric cars, but the EV wave, it sounds a lot like the time. Unfortunately, a lot of people talking about CCIV weren't alive at this time. Folks are so young, but they're saying that any company that had .com in their name was getting lots of investors putting a lot of money into
billions of value for no revenue, no profit. Go back 100 years ago. Go Google how many car companies went out of business in the last 100 years. Go Google how many airlines have gone out of business in the last 100 years. So we're talking about 100 years ago, cars were basically started, 120 years, 110, whatever the number is. Since then, what has happened to the world's population?
Doubled at least? Tripled?
Oh, probably more than that.
Okay.
So massive growth potential. What's happened to the world's income? Massive growth potential. And yet you've had thousands of car companies go under. How many people are flying now versus 110 years ago?
Infinitely more.
An infinite number of percent. I don't know what the percentage number is, but airlines still go out of business. I'm not telling you that EV is not the future. It 100% is the future. I cannot wait for 10 years from now when every single vehicle I own is an electric vehicle. Yep. I really can't. Because I look at it going, it's environmentally better, it's quiet, it doesn't smell, you don't have all these things that you have. I mean, Seth, you have a Tesla.
I love it. And the new Teslas are going 500-600 miles on range. Soon it's going to be 1,000. It's just incredible. You can just drive around, not even get gas.
And you'd come over, stay at my house, and you just plug it into the wall.
Yeah.
And it'd be a slow charge to the plug in the wall.
It'll work though.
Who cares?
So it'll all get better, but sure.
My whole point is, guys, is the difference between the stock and the company. And as exciting as the company may be, and as exciting as the stock may be, there's still a price to be paid for that potential. What we're trying to do here, when I talk mostly, is focusing on fundamentals. How much are you paying to get that growth? How much are you paying to get that profit? How much are you paying to get that revenue? That's all I'm talking about. Momentum side does not care about the company. It doesn't care about the asset. It is completely void of any care in the world about anything besides the price of the stock. I like momentum trading. I am in the process of creating software for myself and soon to be for our patrons to be able to do momentum trading. It's another way to skin a cat. There are multiple ways to skin a cat. This is another way. When we start talking about EV, we start talking about companies like Churchill Capital. This is a company that has, according to Y charts, zero revenue in the last 12 months. Zero revenue, zero net income. Now, I don't know how updated this is, but look at the market cap, $8 billion. So I look at that saying, it has a lot of potential. But in order for you to get a return on your money on $8 billion value, what does it have to do in the next 10, 20, 30 years in order to get you your money on that one? I always draw the example of Amazon. Amazon peaked at $107 a share in 2001 or 2000. It got as low as $6 a share, and now it's at $3,400. So somebody out there is going to say, see, it worked for Amazon. Amazon was the only one. Literally from 2000, I can't think of another .com huge stock that either didn't go to zero or isn't. Cisco, Intel, these examples I always bring up, are still selling for less than they were selling for in 2000. So if you'd invested in 100 companies, thinking they were the next Amazon, when you found the one Amazon, it was up 600 times, right? Every other one of them would have been terrible. So, by the way, not 600 times. If you bought it at its peak at 107, it's up 30 times what it was back then. So you would have still be down. 99 companies would have been either zero or lost half its value, and you'd have made 37 times your money, 30 times your money on the other one. You're still down a lot of money. Even getting the Amazon one right. And you have to assume that you bought Amazon at its absolute low of $6 to actually make money that's reasonable for the time you spent. So even if you got Amazon at the exact bottom and bought 100 stocks, you're still only up 400, 500% over 20 years. And every other one of them is down to zero or lost at least half its value. I'm just to sit there and say, is that worth the heartache? Or would you rather pick fundamentally sound businesses that have stable cash flow, selling at a reasonable price? This EV partnership, everybody talks about EV now. Lucid Motors.
Yeah, I was just going to bring it up, Paul. I mean, so I'm trying to analyze this from a very dumb perspective of a normal human being. It's like, okay, great. So CCIV might be buying Lucid. What does Lucid do? Are they the best company in the world? What am I missing out on? The fear, I guess it goes into the fear of missing out. So you do some look at what Lucid does, and they're not doing much of anything either. And so this is all based on excitement and hype, and we don't want you at home to get confused that excitement and hype out of every other YouTuber channel saying you should buy, you very well might be losing your money.
They might be right on buying it based on momentum, but what they tell you is this company has so much more potential, it's going to sell so many cars, then you immediately go to fundamentals. The second you start talking about units sold, revenue, profit, you're at fundamentals. And the fundamental story does not make sense. If they sat there and said, look at the charts, look at the momentum, I don't care what the company is, look at this, I would say more power to you, you're probably right. But the second you start talking about anything having to do with what the company does, how much money it makes, the revenue, profit, all that stuff, immediately you're on the fundamental argument. And if you do the numbers, what does Lucid have to do? This is the Wikipedia page for Lucid. I'm not even gonna go take on information that isn't even out there. This is the Wikipedia page. Go pull it up on Lucid Motors. It was started in 2007, 14 years ago. It's not publicly traded right now. They have 1,400 employees right now. Nowhere in any of this description does it tell you how many cars they've actually sold. They were making batteries to begin with. All I talk about is what the potential for them selling is. They can now sell, if they built enough, they can build 440,000. What's the number?
400,000?
No, I don't think it's 400,000. Is it 400,000? The bottom, 380,000, you're right. The factory was then designed to support a maximum capacity of 380,000 cars per year. They want to have cars in production by early 2019. Do they have any cars in production right now?
No, I think it's still not coming out till later this year.
Let's Google it and just see, Seth, because the important part here is not just to sit there and speculate.
I'll tell you what, Paul, the comments below are going to be like, guys, you didn't do any due diligence. Why don't you research companies? The point is, folks, is every other YouTuber is telling everyone else just to buy, get on the train. This is going to 10x, 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 20x. And let's come at this from an idea of, I don't know what they're talking about, because frankly, sometimes we don't, but let's just look, because everyone else is not looking. I can read you I got some quotes about some other companies here, Paul, from some of our other YouTube friends, and it's astonishing the basis they put on why to invest in some of these companies.
So I just Googled, how many cars does Lucid Motors sell? Let me put it this way. If I go to Google right now and type in, how many cars does Tesla sell? Between July and December 2020, Tesla delivered just under 320,000 vehicles. I see no recap for Lucid. Nothing for Lucid. They're talking about Lucid finishes the first phase of its $700 million EV factory in Arizona, and that is December of 2020, just 2-3 months ago. On its first model, and they'll start production on its first model in spring 2021. Now, Lucid's not publicly traded, so we don't have a value for it. But I look at this saying, guys, take the hype out. If you want to talk about hype and momentum and charts, we will do that for you. But the second you start talking about units, they currently have a factory that can build, as overpriced as Tesla is, this company's current factory can't even build as many it will build just as much as Tesla has basically made in the last year. You know how many problems there are with car businesses and electric vehicles and all these things? Like, you're really going to go invest in a company that has to hit every single milestone possible for you to even justify your current value. That is all I'm discussing when it comes to fundamentals, Seth.
Yeah, our friend Stock Moog said the exact words. I think these stocks will 10x if all the perfect conditions are met. If you look at
when was the last time all the perfect conditions were met in a company?
Look at the Model 3 rollout from Tesla. Unbeknownst to me, when I paid for an overpriced car, they were building it in the parking lot of Tesla very poorly, and they almost went under doing it, Paul.
Yep. And by the way, how many times did Elon say that? Elon said they were within a few weeks of bankruptcy on several occasions. On several occasions.
So the whole point of this CCIV is that even the mild talks of a merger has spiked this price to parabolic levels. Of course, what if this doesn't happen, Paul? I mean, if it
doesn't happen, then what's it worth?
I was going to say there are normal people out there who like CCIV or Lucid Motors who are all about 10xing Nikola, and when Nikola doesn't get that GM contract, or
everybody here has
Workhorse does not get their USPS contract.
Yeah.
What happens to these companies and your money you're trying to save, Paul? Tell me the story.
Everybody here has that friend that says, if only this happens, I will be a millionaire. When that person says that, what do you think?
Well, they're not a millionaire yet.
And you probably think to yourself, here they go again. Mm-hmm. Their stupid comments about if only this and this long list. That's what you're doing when you sit there and say, well, if only this company can do this long list of hitting everything perfect. You have a complicated life. When was the last time everything went according to plans? What was your plan 5 years ago versus what it is today?
Drastically different.
Seth, we talk about how everything money has gone so much better, but really it's people hear it and go, oh, you guys just started last year. No, we started 2 years ago as completely different things, and just now getting to the point where, wow, this is working.
Yes.
So I look at this stuff saying, guys, life happens. Rarely do things go better than planned. Rarely do things go according to plan. Doesn't mean it's wrong or right. It just means it happens. And with your hard-earned money that you go out there every single day to make, you're going to go throw lots of money into a company that has a no proven track record where everything has to work. And by the way, how many new electric vehicle companies have we heard about in the last year? And they're sprouting up like crazy. You think this is it? You think Lucid Motors is the last electric vehicle company to come out?
Sounds a lot like a Bitcoin, Dogecoin, Ethereum, all the coins that are coming out.
And Dogecoin was started as a joke. That's the point, guys. Eventually you have to sit there and realize that I'm trying to teach fundamentals on this aspect of the show. We have the momentum other ones, by all means. And we're going to have software that goes into it. And if you join our Patreon, you'll get that software for free. But I'm looking at saying, geez, oh, Pete, people, like, I'm just trying to teach you to say, if you want to focus on momentum and say all the hype, the stock's going up like crazy, more power to you. But the second you mention one thing having to do with the company's sales, production, revenue, profit, anything having to do with balance sheets, any of the income, any of the financial statements, you're talking about fundamentals. And at that point, fundamentals, and growth is an important part of fundamentals. I am not ignoring growth. I'm just sitting there saying, if a company's going to grow 5 times over the next 5 years, can I bring up my example like usual?
Please do, because this always gets me.
If a company is growing from $1 to $2 to $3 to $4 in the next 4 years, that's $10 of profit. How much are you willing to pay for that? If it was some car company, you guys would be like, oh, I'll pay $100 for it. Well, you're paying $100 for a company. Yeah, it's going up 300% in the next 4 years. By the way, this is 300%, not 400% for those who don't know math. But I sit there and say, well, wait a second. It's growing like crazy, and I'm sure it's going to grow from beyond that. So maybe I'm willing to pay $10 because it's going to keep growing from there. The whole point is it's not 100. But you guys are being taught that, oh, growth is all that matters. As long as it's growing, buy in. That's what causes bubbles.
Yep.
Look, why did LA, Vegas, Arizona, Florida, the hottest growing markets in the country experience a real estate crash? If they're growing, it shouldn't matter. They're growing. It's because people overpaid for that growth. That is the problem. That's all we're trying to do here is stick to fundamentals. Lucid could very well end up becoming the next Toyota. Let them become the next Toyota. Because you're already valuing them at 1/10 the price of Toyota, even though Toyota makes 10 million cars a year, where the number is.
So if you're scanning YouTube and you see the 10x, 20x, 100x videos from a guy in his spare bedroom, I give you the opinion of a man with 10 businesses, 100 units of real estate.
100 units.
600 units of
Yeah,
real estate.
600.
I'm sorry about that. 600
Soon to
units.
be 700.
Soon to be 700 with a new purchase.
Yeah.
A couple Mexican properties on the cliffs of the Pacific, and
9 figures in assets that we manage, and it's no BS. I'm not saying it to pat myself on the back, and I'm not saying it to say that I'm right because I have that. What I'm saying is there's a fundamental reason why I have this stuff, and my fundamentals do work over long periods of time. The great news is I do agree with momentum. I do agree with charts. It's just I'm trying to teach the different varying ways of making money. And I don't like it when there's a disconnect. If a chart person told me, hey, I'm buying this because the chart says to do this, and also I like the fundamentals, why do you care about the fundamentals? You're reading the chart. It doesn't matter what the fundamentals are. Momentum, it doesn't matter what I don't care what you can keep the ticker symbol. Get rid of this ticker symbol completely when it comes to momentum. Get rid of this. I don't care. This is completely irrelevant to me. That's what you want to learn from. Somebody who understands the difference between momentum, fundamentals, charts, all that stuff. This doesn't matter to me. This doesn't matter to me.
So in the end, I play the role of you, the viewer, and I bring up all this stuff, Paul's success, because I want his opinion against the grain of everything else I've seen. Is your final take on Churchill Capital, Lucid Motors, the merger, and buying into this stock?
My personal opinion is I'm not touching it because there's nothing behind it besides hope and dreams, and I've seen how that story plays out. The last few years, the story's played out very well. Don't look at the last few years. Look at all of your career. You have way longer time than 3 or 4 years to go determine your retirement or your net worth. By it's no secret that the richest men in the world tend to be the value investors. The best investors tend to be the value investors, the guys who believe in fundamentals.
And if you've gotten this far in the video, you might be wondering, well, then what do I do, Paul? If I don't chase down these 10x stocks, what should I be doing as a normal person?
Save, buy your ETFs. You'll match the market without paying fees to some overpriced, not needed financial planner. Join our Patreon. Our Patreon, you're gonna get so many benefits from it. Go to www.patreon.com/everythingmoney. You get discounts. You get our software for free. It's coming out April 15th. It'll have all of this stuff on there. You'll get discounts to our other companies' products like vanities, bathroom products. It's just, most of all, you get a community. The Discord chat, you get to join a community of currently 800 people who talk every single day, thousands of messages a day, talking about investing and talking about different stock ideas, and who've just become friends.
Yep.
It's incredible.
Yeah, so if this resonates with you...
$12 a month, by the way. Just $12 a month. That's it.
If this resonates with you, you can join our Patreon. The link is in the description below. You will join our community of like-minded people who sort of think this way. We have conversations. We're meeting a lot of new people all over the world. And Paul and I are both tired of those hype stocks. And if you're tired of chasing the next hype stop and going to bed at night wondering what your money's going to do in the morning, maybe it's time to try a more balanced, disciplined approach. And that's what we're trying to teach here on Everything Money. Make sure you guys smash a thumbs up. If you hate us, smash the thumbs down. We love you. Paul will argue with you in the comments if you say he's wrong. And yeah, make sure you guys subscribe. And yeah, thanks for joining us. That's our take on CCIV. Love you guys. Appreciate it.